Good morning, everybody. Welcome to today's edition of Toggle's Daily Video Insights. Today, we're going to take a look at why there could be potentially as much as 25% upside in Minerva Neurosciences, NERV, trading on NASDAQ. We'll take a look at the details of the report, and just to note before we do, that actually there have been a string of positive insights suggesting that there could be a little bit of a run up ahead that have been generated by Toggle recently. And as you saw, there was a very successful one earlier in the year this was dating the 12th of April, that also correctly placed investors into the into long positions before the stock absolutely rocketed later on in May. Now, let's take a look specifically at what's going on here. The latest insight is suggesting that actually the recent sell-off may have been overdone and that the stock could bounce back. In fact, the bounce back would take it from 241, which is where it's trading around currently, to $3. Could be 3 months, but actually could be quite a bit sooner. Again, you can see that the confidence interval, think again of the confidence interval as being the range of past outcomes. And so really what this is suggesting is that there were definitely quite a few cases where the stock reached this level much, much sooner. In fact, this is a matter of weeks as opposed to months. So think of 3 months as being really the outer range of that timeline. Again, you do want to see the price kind of stay within this interval. If it departs from it significantly, and particularly if it dips below the red line, this is the moment to reassess, because obviously the stock continues to be pushed lower, presumably by a driver that is stronger than just the entry point and the degree of the sell-off that we're noticing here. Why it might move, this basically shows us that actually the degree to which the stock has been extended, this is the move of 1 month and 1 week relative to volatility, and really has been extended. If you then look at these periods when this kind of sell-off has happened, many of them really coincided, sometimes a little bit later, but with potentially absolutely magnificent return down the road. So really the way to think about this insight is this could be an interesting time to evaluate whether or not this is a stock that you think belongs in your portfolio. If it does, the risk could be somewhat one-sided. Looking at the past performance, again, you can see the distribution. Importantly, this is obviously a very volatile stock, and so the upside could be substantially higher than 25%. But again, to the downside, there were a couple of outcomes that reached minus 10%, including one that was minus 20%. So again, respecting your risk limits is extremely important, and this is why looking at the price behavior and whether or not it's staying inside the pattern is so important. The focus, therefore, for today is on Minerva in the daily brief, which by now should already be in your mailboxes if you're subscribing to it. If you don't, you can do so at toggle.global. We also discuss a couple of interesting points about unnoticed volatility in the markets. And if you'd like to see more of these videos, which we do every market trading day, please like this video or subscribe to our YouTube channel, and you'll see much more of this content. Again, our goal on a daily basis is really just to help investors like you map changes in the data, particularly fundamental data, and try to see how that could translate into lower or higher asset prices and identify stocks that might be primed to move as a result of these changes. Thank you for your attention, and we'll see you again tomorrow.